I am the Vice President of Sales here with Value Line, and today I welcome you to another professional webinar in our series that we offer to the professional investor. We are going to today present a topic focused on the e-commerce industry. So just a few housekeeping items before I start going with the presentation. I can submit, or you can submit questions via the chat or Q&A feature WebEx platform. Additionally, I will do the presentation, and then at the conclusion, we'll look at the chat and Q&A screens and see if there's any questions that we'd like to address at the end of the presentation. If for reason we do not get to your question today, we will follow up with an email response, so no worries on that. Also, today's webinar is being recorded, so if you have to leave early for any reason or you have a colleague who couldn't make it today, you will be able to access the webinar at a future date. A couple other items. First, WebEx has been a little fickle when it comes to the audio portion. So if for any reason during the presentation you hear silence for a few moments, that just means the audio connection dropped off, and I will reconnect and get back in, so do not worry. Also, at the end of the webinar, I will show you how to contact us for additional information, whether that's for purchasing additional services if you're a current customer, or you're a prospective customer, on how to perhaps contact us for a trial period or anything else of that nature. So, with that said, let's kind of jump into today's presentation. Again, the focus is on the e-commerce industry. On your screen, you should be seeing the Value Line homepage for institutional services. It could be found at valuelinepro.com. Here you can find all the information on, as I stated, the professional services, and you're looking at a menu of everything we offer. Today, we are going to log into the actual online platform. We've already done so. Now at this tab, you can see on the top right-hand corner, it's logged in here because it says welcome, and then the username, in this case me, James Wiseberg. So I know I'm logged into the paid site, our research platform. Looking at here, the dashboard, and what we're going to do is we're going to kind of scroll down a little bit, and I'm going to bring up a screen that show us all the different industries that Value Line covers. Today we cover approximately 100 industries. If I click on this link right here, that's industry rank, we will sort these industries 1 to 100. Finally, if I scroll down, you'll see that the e-commerce industry is actually ranked at number 70 in our listing. So you're probably thinking to yourself, well, then why would Value Line want to be stressing a webinar based on the e-commerce industry? Well, we'll talk about that because we do feel, although at the current moment we're ranking it a little on the lower side on our scale, it is a severe growth industry that we feel has a lot of explosion on the upside coming. It is also has about a lot of exciting individual companies with industry itself. Before we jump into that, I want to scroll back up to the top. I'm going to go back to the dashboard here, and I'm going to show you where every Monday you can come, if you're a current customer, to this selection and opinion section right here on your screen, and you can read about what we think of the general economy on our selection and opinion section. So what I want to do is I want to start off with some notes. Harvey Katz, Value Line's chief economist, sat down with me prior to this presentation, and he gave me some notes that he asked that I pass on to our audience today. So we're just going to take a moment and kind of talk about how we feel about the overall view of the stock market right now. So the following was kind of prepared by Harvey Katz, again, Value Line's chief economist. So our country entered the third quarter with a way of forward momentum as far as the economy is concerned, following just an incrementally better opening half. When the gross domestic product had increased by just 0.8% and 1.4% respectively during the first and second quarters. Growth was held in check by weakness in capital spending and drawdown in inventories. Mitigating these depressants to a degree was an additional solid performance in consumer spending. Things appear to be perking up modestly in this current half, not to the degree that appeared likely several weeks ago. The drag in inventory seems to be subsiding. The recovery in commodity prices should underpin a partial rebound in capital spending. Employment and consumer confidence levels continue to build and remains quite resilient, and in turn is again getting support from the consumer. We here at Value Line, we look for GDP growth to have gained on the order of 2% in the recently ended third quarter. We expect output that is modestly above the 2% level during the final 3 months of 2016. Hold in a 2 to 2.5% range in 2017, abetted once again by a combination of improved business and consumer spending. I don't know why I keep saying computer, but consumer spending. The outlook assumes that the Federal Reserve will remain accommodative with respect to monetary policy. Our score is that the central bank will again start raising interest rates, perhaps by December, but will limit increases to no more than 2 small adjustments during the following 12 months. So such an outlook, along with modestly improving corporate earnings and benign inflation, should allow a richly capitalized stock market to hold its ground in the months to come. Our sense is, in fact, continues to be that although the easy money has already been made in this bull market, the absence of attractive investment alternatives makes equity ownership still a compelling option. So overview again from Harvey Katz, our chief economist, on what we think about how the overall markets look at this point. A reminder, and for those current customers and for those prospective customers, we cover about 3,500 equities here at Value Line. They make up a large gamut of large, small, and mid-cap companies. We offer a database that goes up to 6,000 companies in our Pro Elite subscription. The Pro Premium is the comprehensive one that will have all of the reports on the companies we cover. As a reminder also, our analysts look at about 1,700 companies. The additional 1,800 companies are ranked in our universe, but do not have analyst coverage. One final note before we begin the main industry presentation, just a reminder, a scale of 1 to 5 for timeliness, a 1 to 2 would indicate a buy situation, a 3 a hold, and a 4 and a 5 would indicate a sell situation. So, with that said, let's jump over now on your screen. You're going to see in a moment, here we go, the e-commerce industry report. Now, this report is going to be sent to all of today's participants, plus everyone else who signed up for the webinar, and we will send you the report itself after presentation today. Let me start off by just talking about some of the comments that, not so much I'm going to read this report word for word. We prepared comments outside of this. So let's start with that. Move on to our recommended industry, which I noted is the e-commerce group. The e-commerce industry is comprised of companies that produce and sell software to business and corporations of all different sizes. The range of products and services offered work to improve and expand customers' information technology capabilities by enhancing such internal tasks as inventory management, tracking purchases, and operations management. Although the e-commerce industry's rank, as I noted earlier, is nothing special at the moment, we do think there are several worthwhile investment candidates which we're going to discuss today. And as an overview, we think it's a good growth industry, and within this industry, there are exciting companies that we're going to take a look at. The group has been active on the acquisitions front lately. Last quarter's headline featuring Salesforce.com and purchase of Demandware is being followed up by Oracle's acquisition of NetSuite. An all-cash transaction is valued at $9.3 billion. It will not be a smooth sail to the finish, however, as one large investor so far has voiced opposition to the buyout, citing the purchase price drastically undervalues NetSuite. Now, meanwhile, cloud operator Rackspace Hosting is being private by Apollo Global Management in a deal worth $4.3 billion. After giving board approval, the move is slated to be completed by the end of the year. Now, looking forward, there is little to suggest that purse strings will be tightened anytime soon across the industry. For the most part, fundamentals are healthy. Increasing competition should continue to fuel growth via acquisition activities. For investors interested in prospects for buyouts, we speculate that Paylocity, TCTY, and Sabre Corp, ticker SABR, are prime candidates for you to take a look at. If you look on your screen now, we're going to jump over to the dashboard right here you see on your page, but we're going to navigate over to this section right here called Find Ideas. In this section is where you're going to access the Value Line Screener. So clicking on Find Ideas, over to this next option, and if you look up here on purple now, we're going to access the screener with the best way to kind of navigate through our universe. So I'll click on Screener, open up the application that will allow you to easily get through all the different companies that we have in the database. So before we're going any further, we're going to take a look at all the e-commerce stocks that are under our review. So we can quickly achieve this by accessing the stock screener just like I did from that Find Ideas tab. And we're on the Industry tab, left-hand side. So if you're on the left here, all the companies, all the fields, and we have a few hundred of them, that are on the left-hand side are all screenable items. So scroll down just to give you an idea. You see all the different fields that we can screen on. And come down to the bottom here, you'll see a few of these areas are closed. Simply by clicking on the arrow, it will expand that category. So scroll back up. I'm going to click on Industry. Here's that after clicking on it, a check mark appears next to it and tells me this is the criteria I'm screening on. So now over to Industry, and we scroll down to the list here and go to e-commerce. See, there are 88 companies in our e-commerce universe. Scrolling down a little more and choosing to display 100, I will see all of these 88 companies at one time. Based on the size of your screen, you obviously might have to scroll, but all 88 companies. So obviously, it's too far large a group for us really to purpose and consider things, but we can easily narrow it down by adding additional factors such as value on proprietary ranks and ratings. However, we feel it's important to touch on the prospects and important attributes of the industry before we move forward. So keeping your eye on the list here, checking out a couple of different companies in there. Competition is probably the biggest concern in the e-commerce space. Industry players often offer similar products and services, leading to an aggressive fight for customers and market share. In addition, most in the e-commerce space must directly compete with IBM, Microsoft, Cisco, and other IT giants who can often offer customers more services at lower prices. It's difficult to determine which e-commerce corporations will become and remain successful from one quarter to the next. This competitive dynamic can lead to inconsistent revenue and profit streams from year to year. Not surprisingly, then, a number of stocks within this group carry low scores for earnings predictability. To repeat, e-commerce companies should invest heavily in R&D, targeting new software offerings as customers' needs in order to better compete with larger competitors. It also possesses low barriers to entry. And new companies offering a quality suite that is well received can take a sizable bite out of another firm's existing business. The industry continues to grow at a rapid rate. With more corporations focused on improving their IT capabilities and bolstering their presence on the internet, they continue to achieve record revenues over about that. As I kind of gave you a heads up before, WebEx has not been the most reliable source lately for audio, but hopefully we're back and everybody remained with us. So just picking up where we left off, talking about profitability for companies. A number of factors can contribute to the bottom line loss, one being high interest payments stemming from a heavily leveraged balance sheet. The main culprit among the e-commerce space is mostly operating expenses. As we mentioned earlier, many of these companies allocate hefty sums to research and development. While general selling and marketing expenses, when compared to many other industries, are exponentially higher. Despite uninspiring earnings results, or in many cases consistently red ink, customer stock prices have been outperforming the broader market of late. The beating results can be attributed to noteworthy top-line expansion, a performance metric shared by the majority of the group you see here on your screen. This investment sentiment is high. It appears that aggressive capital spending has its rewards, mainly in the form of abundant sales growth. Double expansion should easily be attainable largely through acquisitions, organic growth, and increasing international presence. So, while we're looking at these lists of companies, we're going to scroll back up to the screener, and we'll try to narrow this group down a little more. So, 88 companies in the e-commerce industry. That's a lot of information, right? So let's try to find an e-commerce stock with particularly good investment merit. We have also discussed sales growth as a major driver for this industry. So in the screener, under projections, we're going to go and look at the 3 to 5 year sales growth rate. And scroll down here, you'll see on the left-hand side here, I'll show you. Right here, you're going to see the projected 3 to 5 year sales growth rate. And we're going to use right now to kind of take a look at some new things. If I choose that, simply clicking on it, we add it to the top up here to our screener. And on the criteria we have right now, maximum choice, we've gone from 88 to 18. But we're going to take a look at those companies that at least a 20% projected growth rate. So I'm going to come here, type in 20, click filter, and then see we're left with 6 companies. Max has given us 6 companies, which are down here on the bottom of your screen. Then we're also going to add in Value Line's time-tested proprietary timeliness rank to further reduce the field. We're going to focus on stocks ranked a 1, which is the highest for timeliness. So if I then come over and I hold down a little bit here on the left-hand side, and ranks and ratings right here, you see a choice timeliness rank. I'll use that by clicking on timeliness rank, scroll back up to the top, and then on 1 for timeliness, and then we have one company. There's one stock called Splunk Inc., ticker SPLK, and that's the company we're going to focus on for a moment. So if I come here and click on this company, it's going to load up the digital version of our report, which you'll see on the screen right now. This is a San Francisco headquartered corporation that provides a software platform that enables organizations to gain real-time operational intelligence by harnessing the value of their data. Its software collects and indexes data on a massive scale, regardless of format or source, and enables users to quickly and easily search, correlate, analyze, monitor, and report on the data in real time. If down, I want to highlight the commentary module for this company. Looking at this module, Value Line analyst Nicholas Petrikis has the following to say about Splunk's prospects. We have $25 million to our full year 2016 revenue forecast, largely owing to the acceleration in the company's cloud business. Roughly 40% of new orders in the July interim and reach a booking rate of $100 million. Cloud operations, to no surprise, underpin our optimistic revenue outlook. Also think this will be Splunk's main growth engine over the coming 3 to 5 years, especially given the global adoption and necessity of its services. protection from cyber threats, general cloud security solutions, and large-scale data collection and organization are all gaining traction and drive demand for the long haul. Now, as for the stock, we at Value Line think it should appeal to both short and long-term investors. So let's down the commentary module and jump back into the digital report. As mentioned, Spring shares garner our highest rating for timeliness. Now, as a reminder, timeliness tells us it should outperform the market over the next 6 to 12 months. What capital appreciation potential to the 2019-21 period is attractive, even with the recent surge in price. So, conclusion, we that the e-commerce industry currently houses a number of worthwhile investment choices, and we are particularly high on Splunk. Now, we'd also like to mention that this week we have bolstered our coverage in the e-commerce industry with the additions of Black Knight Financial, which are BKFS, GoDaddy Inc., ticker DDY, Mercado Libre Inc., ticker MELI, and Ultimate Software, ticker ULTI. Although the four stocks makes their debut rank favorably for timeliness, they still offer quite a bit of investment appeal. What's more, all four companies possess market caps that exceed $5 billion, which interest investors who prefer to focus on large caps. So that brings us to the conclusion of the presentation as far as the e-commerce industry and the companies that we like are concerned. What I want to do at the moment here is to show you how to get a hold of us if you have questions. I see right now there aren't any questions at the moment, so that means hopefully we did a good job presenting our case to you today. But if you go to valuelinepro.com and you look on the top right-hand corner, there's a questions and contact us section. Simply click on that. The form here, click submit, and we will get back to you as quickly as possible. So I want to thank you again. As a reminder, my name is Jason Wiseberg, the EVP Sales here at Value Line. Thank you for attending today's webinar. We do these once a month for our professional audience, and we look forward to hopefully seeing you again in the future. Enjoy the rest of the day.